Whether you're a beginner like I was a couple years ago or an experienced investor, investing is a great way to create wealth over time. And I know if you're a beginner, because like I said, I was a couple years ago, it can be super overwhelming. But what we're gonna do in this video is show you how you can get started investing in stocks, bonds, even life insurance, starting from scratch. Number one is stocks, which is crazy because a couple years ago, before I even got in finance, I don't think I even knew what it meant to buy stocks. But when you're buying a stock, you're actually buying a small part of the company. And so as the company begins to make money, so do you. And you can earn money through dividends, or as the stock price goes up, your value actually goes up within the company. Now, there is also a risk to buying stocks because if the company does not perform, it does not do better, then basically the value of the stock goes down. So think Blockbuster. So at one point, it was the way that people enjoyed entertainment. They would go rent movies. It was very valuable. But right now, if you bought stock in Blockbuster, it wouldn't be worth anything because there are none that are actually in existence. That's why it's important to do your research and invest in companies. They may have done good in the past, but thinking about the future because that's what drives the value of a stock. Let me give you an example. Think back in 2020. Most people had never even heard of this company called Zoom, let alone were using it because most of us did our business in person. You know, you would go to your office, you would meet people in person in order to conduct your business. But when the pandemic hit and there was a media shutdown, we needed a way to communicate and also take care of our business as usual. So you think about softwares like Zoom that allows you to do meetings, Google Meetups, Slack. The people who own stock in those type of companies, they became millionaires and billionaires just because the service became more valuable in the future. So it's not always about what's doing good in the past, it's about what do you think people will need in the future. And that's a good place to kind of start doing some research and maybe invest in those type of companies. Now, one way to actually research companies is to look at their financial statements. So what it's gonna show you is the money that they made in the past, but also how they're spending their money now. And the beautiful thing about being in the information age is you can go online and get so many news and so much articles to see how a company is actually performing in the market. Now, another thing you want to keep in mind when you're actually investing in stocks is something called diversifying. And all diversifying is making sure that you don't put all your money into one company. So there's an old saying, don't put all your eggs in one basket. And just remember this, there's a risk reward when it comes to investing. So the higher the risk, the bigger the reward. But also the higher the risk, the more money you can lose. And the lower the risk, the less you can make, but you don't have to worry about losing as much. And so when you're looking for some of the best places to invest in stocks in 2023, these are some of the places I would consider, like traditional brokerage firms such as Charles Schwab, robo-advisors like Betterment, discount brokers like TD Ameritrade. You got online banks like Allibank and cryptocurrency exchanges like Coinbase. But as always, do your own research and choose the options that makes more sense for you. Now, the second thing is this, it's called bonds. And basically the way that bonds work, you are actually lending money to the government. They promise to pay you back what you put in plus interest, and they're also gonna guarantee that they're gonna pay it at a certain time period. So bonds are actually considered less risky than stocks because think about this, who is more likely to go under? A company or the US government? Makes sense. So it's less risky, which means you're more likely to get your money back, but because it's less risky, there's lower interest and you're not gonna make as much as you could potentially with stocks. Another thing that you wanna consider is the term of the bond. So you have something that's called short-term bonds, which are typically from 1 to 3 years. And because they're shorter term, they're less risk. So it's more of a guarantee and you're gonna get your money back sooner, but you're not gonna make as much. And of course you got something else, which is long-term bonds. And these are typically something that's gonna be 7 to 10 years. And because it's a longer time period, it's more risky and you have less access to your money right away. But because of that, the potential to make more is much higher than it would be in the short term. So it just depends. If you're looking to make money in the next year or two, short term will be the way to go. If you're looking for something more long term and you don't need the money over the next 17 years, that might be the route to go for yourself. What you want to remember is this, when you buy a bond, you're actually lending money to an insurer. So just like how a bank checks your credit score just to make sure that you're reliable, you also want to do the same thing for whoever you're buying a bond with, because you want to do your research and just make sure that you feel comfortable that they're going to come through on their promise by what they've done in the history. So now you may be thinking, okay, I want to buy a bond. Where would I go to do something like that? And traditionally, the best places to go would be banks, brokerage, online brokerages, maybe a financial advisor. But what I highly recommend first is go do the research. That's the first thing. And try to find someone who suits your needs and your budget. That's where I would begin. Lastly, my favorite, this is life insurance, and this is the one that I have the most experience with. Life insurance is actually a way that you can protect your family if something was to happen to you. So this is how it works. You pay a certain amount of money every single month or maybe every single year, and whenever you pass away, your family then inherits a lump sum of money from the insurance company. And I know it's very confusing, but honestly, most insurance fall into one or two categories. The first one is called term. And the way that term works is you have it for a certain period. Let's say you have it for 30 years. Basically, you're gonna pay that amount every single month to the insurance company. And what they're saying is if you pass away during this 30 years, we're gonna give your family the lump sum. But if you outlive the 30 years, the term then terminates. So it's basically like a lease, and you have it for the 30 years, but as soon as the lease is up, you have to turn in the keys and you have nothing to show for it. You lose the policy and you lose all the money that you invested into it. Now, the second one is called permanent, and there's different types. You got whole life, you got universal life, index universal life. Not getting into all of that, but the way that permanent insurance works is basically it's gonna be more expensive. So you're paying more for this every single month, every year, but the insurance, it never expires. So whether you pass away at 50, 60, or 100, your family is guaranteed to get the lump sum. But not only that, certain permanent policies allow you to build up a savings of cash value. And it's a way that you can earn on average 5-6% every single year just by putting money into your life insurance policy. So putting the investing aside, it's important to have life insurance, especially if you have dependents. So let's say you got a spouse or you have children, because we just never know what can happen to us at any moment. And what it does, it allows you to have a peace of mind and create some financial security that if something was to happen to you, God forbid, hopefully it doesn't, your family can still maintain that lifestyle without having any changes. That's what we want. Now, as far as life insurance, if you're in the market, so you can go to an online marketplace, you can go to some of these big companies and just reach out to them directly. You could also go to independent agents and they'll be able to give you more guidance and probably break down some of these policies and just see what works for you and your budget. Now, for me, I actually have my own agency, which is Chosen Agency. We are brokers, so we love helping families when it comes to this information. If you want some of the personalized information, you want some of the details and see how this stuff works for you, do me a favor, click the link below, schedule some time to talk with us. We'd love to share the information and see how we can serve you and your family. It's crazy, just a couple years ago, I didn't know the difference between stocks, bonds, life insurance. So hopefully this video gave you some clarity on where to begin and what the difference is. And if you actually like it, do me a favor, go like the video, subscribe to the channel, and also share with someone else you think can find it useful. With that being said, see you guys later. Take care.